Here we are on the dollar yen 5-minute time frame, and we have a high and tight flag that's set up. Got a little bit more confirmation with this one because we have a higher time frame pattern and an initial structure high, plus we also have a double bottom which is now pulled back for a 26.18, providing quite a nice entry. Quite a nice entry onto this trade. So let's just delete everything off, remove the orders, do a higher time frame analysis, and then we'll take a closer look here at the actual trade. Here we are on the daily time frame, and not a great deal here. We've got a very large wick that happened at New Year, and we've been consolidating after that. Let's go over to the 240. Here on the 240, we've kind of been just meandering sideways here, particularly this. If you look at this consolidation area here, what we've just done is with this candle we've broken above it. So as we drop down the down to the 60, I was looking at this earlier on as a potential triangle. The only problem for me here is we actually came down a little bit too low. We came down to retest the lows here. We then double bottomed and then put in a higher high, higher close. Now I could have entered in here and then played for the extension up to the 127. I didn't. The pattern just wasn't quite good enough for me. And I would have then played for this 127 extension. Now, here's the thing. The trade hasn't played out yet because my targets would be the 127, but we have had confirmation for me that this trade was valid by having this break above, close above. Targets would be at the 127, which is up here. And as you can see, we have not yet got up to that level. So what can I then look at? Because if we have confirmation that a pattern is playing out and we've got more confirmation that it's heading towards targets, then I can drop down the time frames and have a look for an entry reason. So we'll do that in just a moment, but what I want to show you is this. We had a rally up and we've just been kind of within the wicks here. So if I just highlight these wicks, you can see we've come down just to test those wicks, and we could see a continuation from this point. No real confirmation of that, but that's what we could be looking at. So let's go to the 15. Okay, so here on the 15, what we can see is we've got quite a nice directional move. We've got the market that came up for a double test, and we've got the market that came down for a double test there as well, giving us two tests either side, making this a valid opportunity for a high and tight flag. Although just looking at it again isn't quite as good as what I like to take when I look at these high and tight flags. So what I do again is I drop down at the time frames. Let's go ahead and look at the 5-minute, and does it give me another entry reason? And if you follow me and I talk through any channels or flags, then I always say time and time again, watch out for double bottoms or retests that occur within these channels. They're high probability trades and good reasons to get involved in the trade. And if you see right here, if I just bring these arrows over, we have a test. We've got that test there. So we had a double bottom here, and we've had another double bottom here, giving us a very nice structure shelf to get involved. With this candle, we broke above the V point of the double bottom, so we can now look for a 26.18 opportunity, meaning I can use that as an entry into the high and tight flag and play for the 127 extension and the 127 extension of that bit bigger triangle that we haven't yet hit. Okay, I did that wrong. Let me redo that fib. Get rid of the 127. I was talking about the 127, and that's what I selected. So aggressive entry here at the 618. That's what I've done. I have been out and only just come back and seen this, so I haven't got a fantastic entry. You can see I'm just above that 618 there, but I've used that as the confirmation and got involved with the trade. So if we zoom out, I'm going to be looking for a few things. So we know that we have our bigger pattern that has not yet hit the 127, but what we also have is we now have this high and tight flag with the double bottom and the 26.18, and that 127 comes in at 108.97, just 3 pips before that psychological number. So what that means is that I can play for the 127 as my target, but because we are just a few pips before that psychological number and it's highly likely that we're going to go up and test it, then I can play for just 2 pips before that 109 psychological number. And if we just go out to the 60-minute time frame and just look at where that psychological number comes in at, and I'll just move this line up to here, you can see just there we have this structure shelf right at that 109. So in actual fact, I'm actually going to move that back down to dead on the 127, so it's 3 pips before that psychological number. So in terms of risk then, let's have a look. So in terms of risk, well, I've gone, what was the lows here? Was it okay? I've gone 4 pips below the lows because we have 2 double bottoms effectively here, a higher high, higher close above the double bottom and a 26.18 entry. So relatively tight stops, even though this is quite a small pattern. So we're looking at just 10 pips of risk and a reward of 16 pips. So a nice 1 to 1.5 risk to reward there. And all we're waiting for now really is for price to go up, make a new high, potentially a pullback, and then carry on up to our target. So we'll come back and hopefully get some pips out of the market here. And we're back for an update, and as you can see now, we have actually broken out of the channel. We are putting a new high here, so this high is higher than the previous structure levels, and what that means is that I'm now able to implement risk management. Now, not by a lot, but what it means to me is that we've broken out of this and we should not now violate these lows. In actual fact, I would be surprised if we came all the way down to this level. It is possible, but I would not expect us to go past it. So I'm just going to shave just 1 pip. It isn't a great deal, but you know, risk management is risk management. Wherever you can save pips, you implement it, and a pip is a pip at the end of the day. Could quite easily have been 15 pips that I could be reducing this by if it was a bigger trade. So that implemented now. So this to me is indicating that we have a higher probability now of continuing up to hit our targets. And we're back for the last part of this video, and as you can see now, price has rallied down and I have been stopped out for 9 pips after implementing risk management. What a real shame. We got the breakout obviously to the top side. This never got to that 127 or that psychological number. However, if you were playing the bigger pattern and the 127, then congratulations, you have just tapped that 127. Unfortunately, I didn't quite get the entry for that, so losing trade here for -9 pips.